Welcome to Boom and Crash Expert Advisor. Today we'll be dealing with spikes, and I have with me a guest. I call him ATM, or he's popularly known by the acronym ATM. He has been trading forex. He's been into the trading business for about 8 years, and he has much experience. He goes trading, mastering indicators, mastering the trends and price action, and all you can think of when it comes to trading. Today it is a great privilege to have him share with us his depth of knowledge that he has accumulated over these years, almost a decade of trading. Man, it's not been easy. I'm sure he would love to share with us some experiences of recording huge losses, moments of disappointment, the hidden side of the story we do not hear. Most of the times you hear people making millions and tens of thousands with forex when it comes to trading, but we do not hear of the down moments, the losing moments, and all that. I'm sure he's going to share with us how he climbed through the ranks throughout the years. He learns from his mistakes and all that, and how he has been able to master like a monk on the mountains. He's been able to master his way around the whole market. And then recently he spoke about the sporting boom and crash somewhere on the internet, and he was like, man, this is going to be an easy market, and he's milking the market. So it is my greatest privilege to introduce to you all ATM. He is also the founder and creator of Boom Crash Strategy, a new YouTube channel that I recommend you subscribe and you follow. And trust me, you're going to learn a great deal of stuff. So I'll welcome ATM to take over. Thank you.
All right. Thanks for that great welcome. And yeah, guys, so I'm here today to be able to help you understand the psychology of the market, understand how to take trades, understand how to win. Because the main thing you want to be able to do first is put knowledge in your brain before you think about putting money. So I'm going to be explaining a simple strategy for you guys today. Let me get it set up. All right. So we're on Crash 1000 right here. And as I go on ahead and set up my chart here, I'm going to show you guys how I set up my TradingView chart. And I use TradingView more frequently than I use Metatrader for the sake of being able to use all the drawing tools that TradingView has on top of some of the extra little features that are inside of the chart. And I'm going to go through some of those things today. So what you want to do first off is get on a daily chart so that we can understand where we are. That's how we want to start off. I'll go in, I'll use the horizontal ray tool, and I'll add 2 lines to get the high and the low. From that point, I'm going to break this chart down into the 8-hour. I can fine tune these lines, find points where they go to, and I'm using the magnet mode here so it snaps onto the candle. And what I'm doing here is finding boundaries. So then that way, if price breaks the low, we know we're going to continue lower. If price breaks the high, we'll continue higher. So what I'm setting up here on my higher time frame analysis. And what I typically have it on is the 4-hour chart after I've done my higher time frame analysis. Now, a little secret over here, right click the chart, go ahead and hit the countdown selection over here, and that'll align is in the current candle. Now, you guys know I use the Heikin-Ashi candles, so those can be found right up here in your chart types. So I switched them from regular to the Heikin-Ashis. And what that does is it averages the last 2 candles together into one. So with our bias being down, you can understand and see how over here on the 1-minute chart, we're getting a lot of spikes today. Knowing this bias ahead of time sets you up for your day. You have to do this as a routine. Because if you just come into the market and just say, all right, it's crashed, I'm going to go ahead and buy today, just because you didn't check your higher time frame. So by checking your higher time frame, this will immediately help you eliminate the losses that you're already going to encounter just by not knowing what the strong trend of the day is. Okay. So what we want to do here is basically our higher time frames, the daily, 8 hour and 4 hour. And we can zone in on the 1 hour because we have what? 24 hours in a day. So each of these hours, right? This is 60 minutes, right, of trading. Think of it that way. The hour time frame is a neutral zone. It's 60 minutes of movement. So how can we see that on a 1 minute time frame more accurately? I'll show you a little secret over here. What you want to do is use your drawing tool called the cyclic lines. They're cycle lines, okay? Now, if you want to, you can come down here and look at the time and plot it from hour to hour. A faster way to do it, put this time chart on a 1 hour time frame, and then you're just going to drag it from one candle to the next. It's going to put a lot of lines on your chart. So here's what's going to happen when you go down to the 1 minute. Is now you're going to get your time frames locked in right on point. All right. So let me fine tune that just a little bit. It's off by a minute. Let me do that one more time. I think it's off by a minute. So let me go from this hour right here. I'll show you another way to do it. You can just go from this hour to the next hour. Okay. And then make sure you lock your drawing tools, and that way you don't move it when you're moving your chart around. Now, what this has done for us, right, is it lets us see where the hour opens and where the hour closes. So we can use the same method that we were using on our daily time frame on our 1 minute. So the most recent hour opened here and it hasn't closed yet. So that means this is our hour low. Okay. Now, just for the sake of example, let's track our previous hour. Okay. So this was our hour high from the previous hour. It went down to the low. It broke that high. So this became our new high. And it broke the low where the new hour opened. The reason why you want to have these drawing tools on your chart is because it's going to help you understand where price is moving within the next 60 minutes. So what I want to be able to show you here, guys, is you want to be able to use your drawing tools. You want to use things like trend lines, where there was a break here. Could have took along here. After the second break, you draw a trend line from here over here. That's where we can take our second trade. So if you're looking to take your 4 to 5 candle scalp, you could do that there. And you could do that there. And this is all just off of blank charts, no indicators yet. But what I really want to explain to you is even after you start learning how to use your drawing tools more proficiently, you'll be able to understand how to start using things like Fibonacci retracements, where we go from the swing high, swing low, go down to here. And then we can predict that price will probably either hit the 382 right here, the 50 line, or the 618. Some of the more complex things I can get into are things like the Elliott wave, which you can find here, or you can use the 3 drive pattern. So you find a level 1, level 2, level 3 pattern, and then you extend it out to your predicted price target. So these are a little bit more advanced strategies. You're going to have to kind of do your own research to be able to understand how those work, but it's all about pattern recognition. And as soon as you could find these kind of setups, these 3-wave setups, you're going to have a more accurate trade when you get in, because you're going to know that you have normally a level of divergence that's going to back you up. So let's go on and add on things like the awesome oscillator. Change these over to columns. And what this is going to help us do is be able to also identify trade setups. So when you get the color change on the awesome oscillator, That's going to allow you to be able to get in a trade. And then when the color change happens again, that's when you can get out or predict for a spike to happen. So what I also want to show you is we had on before, like last time, MACD setup and parabolic SAR. Now, one of the tips I like to do is add on the SAR twice, and then merge this up. And then that way I actually get the signals as well on my awesome oscillator. So I could see not only the color change, but the start out reversal change. The MACD, if you were on our last live stream, you saw the settings that I had. The first MACD is a black MACD. It's just a default. Skew it so that we can see the 0 line. And what you can see here is when the MACD crosses, that's also an area where we could take our trade. So you want to use your drawing tools simultaneously on your indicators. So this is how pros trade. It's not just about blank charts or the indicators. It's about the combination of how you use everything together to be able to trade with confidence. So let me add this on here. Remember that the settings 3, 15, 3 is our fast MACD settings. Skew the MACD so that we can see inside. And now this is our spike catcher MACD, and that we know when this MACD starts to create negative bars when it opens. So let me go ahead and now add the countdown on here. So we got 40 seconds left, right? So we know that when this MACD starts to open and create negative bars, that's how we start predicting on our spike catcher. So what I see here is that we're also in a long. So I just want to show you guys real quick. There goes a spike, actually. Funny enough. Now, that actually didn't show us overbought and oversold in that scenario. However, it doesn't have to. Normally, that occurs when we're in an uptrend, because what the MACD is going to do is show us overbought. That's part of why this didn't happen. This spiked right here also because why? Remember, we're in a solid downtrend from our 4-hour, 8-hour, our daily. This new hour that just came out, look how strong this new candle is. Remember, this is our new candle. It just happened a couple minutes ago. This candle, compared to the last one, look at the size of the body. We're waiting for the wick to push past to show us continuation. But we know, while scalping on a 1-minute chart, we already know there's a high level of risk while taking our buy trades. So this is our scalp, in and out, 5 to 6 candles, and we're done. So you shouldn't even have got caught by that spike. Now, the next thing I want to also show you is, if you notice, the MACD here was actually showing you a hidden level of bearish divergence, which is something it's going to take a little while to learn how to identify that. But because of that price pattern right there, because I see that this histogram closed lower than its previous, that the strength to the upside is actually weakening. So this spike not only should be stronger, we need to be cautious that it's going to continue even down further. So we can also confirm this lastly with the awesome oscillator. We see the color change there. And we see the SAR dots above it, letting us know it's going to continue to push it down further. So that's what I got for you guys real quick, is just pretty much how to combine your TradingView chart setups with your indicators and your drawing tools, using them combined. So
Right. Thank you very much. Please, do you have any questions for those watching? I'm very sorry we were disconnected early on. I think there was some slowness with the YouTube Creator Studio. So they're back on it. It's also on record, so don't worry if it cuts again. In the meantime, you can drop your questions. But I think I asked a question, and in the course of you answering, I realized the net wasn't working, which was concerning several indicators confirming before you enter a trade. And what is the, let's say if you're using 5 indicators, Do you have to have all five confirming, or you need, say, a minimum of three confirming before you can enter a trade confidently? Yeah, so that's the question on board for those who missed out. Hello, ATM.
So yeah, so basically what it is the more, yeah, can you hear me now?
Yeah, I can hear you.
Okay, there we go. So what it boils down to is a lot of people think that there's some one holy grail indicator, and they also see how, you know, a lot of the pros, we have tons and tons of indicators on our charts. Sometimes a lot of people, they can trade with blank charts. However, from my experience, what I've really learned is it's really the combination of knowing how price action works and honestly having years and years of experience and seeing how price action works to be able to trade off of blank charts. So what I encourage people to do is to start researching indicators one by one, to start understanding what they do, how they can help you out. And it will raise your confidence because it does give you an added level of confidence to be able to take your trade. It's just your experience level of how many times you've used this setup to be able to understand how to trade it, right? So like right here, what did we catch earlier? We saw that this area right here was going to create a spike, and we saw that beforehand, and then look what happened right here, a spike. So how would I be able to have found this spike without the indicators? So what I really want to explain to people is it's because of things like, watch, I'll add on a moving average, I'll change it to a 200 period moving average, change it to black. Now watch this, perfect entry for a short right here. And how else would we have known without our indicator that as price started to move from this spike down here, it retraced and moved back. It came right to where the 200 period moving average, and then huge spike right after. See, that's a confluence that by having the knowledge of understanding that, I mean, I use a 200 period moving average, but that's for a whole nother reason. But pros use it because it works over and over and over. So what I really want to get at real quick is just that when you have more indicators on your chart, it does become a little bit more complicated, a little bit more complex, but it boils down to your knowledge base of how well you're able to find a setup that you're looking for.
All right, thank you very much. Adnan Global Access Forest, one of my friends, also has a channel. He teaches boom and crash strategies as well. He has a question. First of all, he says, very good presentation. Lovely. My question is that, can I use my normal MT5 chart to do all this? Because sometimes TradingView have some issues.
Okay, so Metatrader is good as well. I think they both have their pros and cons. So TradingView has a lot more flexible kind of view to it. You can change the candles how you want them pretty quickly. It has a lot more different options on it. Metatrader, I would say, is definitely more customized, where you can get really strategic with your templates and indicators, custom indicators you can't find anywhere else. So they both have their advantages and disadvantages. What I recommend is using them simultaneously. So in that way, on one screen, you can have the TradingView setup where you can use all your drawing tools that they have. They have so many, and I recommend trying to master them. You have so many drawing tools that you can use that'll help you out that aren't on TradingView, or I'm sorry, aren't on Metatrader. But what you can do is use the indicators that Metatrader has to be able to give you the signals and alerts that then you can come on your TradingView chart and, you know, either write yourself a note or be able to find a setup more accurately with both charts combined.
Right, thank you. Endurance says, we need the setup of the MACD.
Okay, so the original MACD is in black here. So these are just the default settings that it gives you. 12, 26, 9, regular MACD. The only thing I really did here was I changed the histogram to columns so that way you could see it a little more clearly. And then our fast MACD, which is in blue, same thing. 3 for the fast, 15 for slow, 3 for the signal line. And you got to remember, though, that this spike catcher strategy works best in uptrend situations, which will be when the 1 hour chart over here is green candles, not red candles on Crash 1000. So you got to use it for the specific market, and you got to know what you're looking for.
All right. Thank you. I think for MT5, you can always have, two windows open, one for with the same market, Crash 1000. But let's say on the right, you can have the 1 hour time frames. And then on the left, you can have the M1 or the M5 with your indicators all on the screen. So I think you can replicate what's on TradingView in MT5 in a creative way. Adebayo Ojo says, thanks. I would like to ask your view on EA, that's trading robots. Based on your wealth of experience, would you think it can work for this market? If you automate this setup, would it work profitably and consistently? That's the question on board.
Okay, so he's asking about expert advisors.
Yeah.
So yeah, I use expert advisors. They're definitely worth it. There's a ton of free and paid ones. If you go to the MQL5 marketplace, which is the Metatrader marketplace, you're going to find a wealth of information there where you can download them, back test them, and use them. What they do, yes, they automate your trades. So if you set them up and tweak it to some of the settings I have here, right, the EAs are going to be able to take the trade for you. However, one of the things you want to be able to do, though, is manage those EAs and make sure that you take the profit. Don't let the EA take the profit. Unless you have it set up to where it's like a super quick scalp on an EA, that's fine. What I've typically done, though, is I personally like to close the trades, but I like to let the EAs enter the trades for me. So what this does is it removes the stress for me of having to enter, right? Which is what we all freak out about, is when to execute. Let the EAs do that. Once you see profit on the table, now it's up to you to just grab it off. So it really reduces the stress to trade with EAs, but the hardest part is finding settings that work on the market that you're trading.
All right. I hope Adebayo is answered. Z-Boy says, can you talk about stop levels and tell me about high profitability take profit zones?
Okay. So great question, by the way. So the thing is stop levels within boom and crash typically don't work the way that they would work on normal Forex markets. So as far as stop levels, when it comes to a buy trade, let me get a buy trade on here. When it comes to taking longs, your stop losses are not going to be respected. So what's going to happen is let's say I want to take a trade right at this SAR cross right here, right? Before the spike happens. Now, let's say I put my stop loss underneath the most recent spike right here. This stop loss, unfortunately, is probably not going to get respected. And what's going to end up happening is the stop loss is actually going to get pushed down to here. That's just how boom and crash works. Now, on the other end of it, if I'm taking a sell trade, right? Let's go right here. My stop loss is going to be somewhere where the most previous spike was. So when you're taking a sell trade, though, your stop loss actually will be respected. And I'll explain why. if this market continued up in its 45-degree angle pattern, my stop loss would be hit for a sell trade, and it would exit me at a calculated loss. Now, I'm looking to take a short right here, or I'm looking to catch that spike, and we would have actually caught that. So I could have put take profit down here. And one of the easiest ways to find take profits is to start using Fibonacci levels, where from the recent price pattern, you could see that we came down close to the 2618 here. If you draw another Fibonacci from swing high, swing low, we almost came down to 618 here. So this being a little area of confluence, that's one profit target for a scalp short. Let's just go find another trade. So let's see, from this area here, we have the 1618 again as a profit target, and it went even lower. 2618 is another profit target. So I use Fibonacci's to be able to find levels of confluence where they line up, and that's typically where price is going to reverse. So that's what I got for you guys just on that one. Do we have any more questions in the chat?
I have one. How do you spot fake reversals? Is there a system you have? Hello?
Okay, I'm sorry. So if you were to look at this area right here, and you were to take a buy trade, you're asking about the fake reversals.
Yeah.
So after this huge spike, would you think that it would be safe to try and take this trade? No.
No.
The reason why is because price action still being underneath the 200-period moving average means that we have a higher prediction of spikes to occur. You have the Sardots still above price, so a spike is typically going to occur. That's exactly what happened. Now, price moved down to a lower level of Fibonacci, the 2618. And what that does, though, is it stretches the area from how far we've dropped from the 200-period moving average to where we are now, right? So what happens is this area becomes a better area to take a trade. Why? Because price is now trying to reverse back to the mean, and this becomes a better trade setup. And as you can see, price tried again to do what? To hit the 200-period moving average, right? Yeah. So the easiest way to answer your question, the easiest way to be able to spot fake reversals is divergence all day long. Divergence right here, guys, right here, right there. The sooner you learn how to be able to do this, the sooner you take trades with more confidence. See, I would spot this on a MACD. This is a regular MACD. Now, what is a divergence? A divergence is when the oscillator is doing the opposite of price action. You see how we're creating a higher low, right? You look over here, what did price action do? It created a lower low, right? Let me get rid of this.
Yeah.
Okay. When that occurs, this becomes your trade setup, right? And it'd be even safer on the Sardot cross. You could put your stop loss, which actually won't be respected if you're taking a buy trade. So you could put your take profit basically, like I said, we're looking basically to get back to the 200-period moving average. This would be your trade. But if you're only looking to take your 5 to 6 candles, you would have been in and out roughly around here, anywhere in here. So hopefully that helped you a little bit to spot fake reversals. Is you want to find divergence plays.
Yeah. Well, thank you. Any more questions? All right. In the absence of any more questions, we would like to go back to Adnan's question. He said he got disconnected, and his was that can I use a normal MT5 chart to do all this because sometimes TradingView has some issues. So he got disconnected. So you'd like to know.
Okay. So TradingView and Metatrader have their pros and cons. TradingView, I would say, gives you the edge of being able to use all the drawing tools that they have in their arsenal. You literally want to use as many of them as you can. So that's definitely going to be the benefit of TradingView, on top of the fact that TradingView gives you this countdown timer. Okay. This countdown timer right here is so key because as you're looking at price action, especially on the higher time frames, you're able to count down how many minutes we have left in the current time. So we got 40 minutes left in this hour over here, right? So then on this TradingView chart, let me get back to current price, right? I can see this full hour that we're going to be trading, right? So now I can do my open, my low, my high, my close, and I'm trading within this range now. On MetaTrader, I would typically like to use my EAs. I don't use a lot of drawing tools on trading MetaTrader. I use them on TradingView. So let MetaTrader be your like static robot, and then you do all the masterful artwork of trend lines and everything here on TradingView. So I hope that helped answer your question. Use both.
Yeah. All right. I hope you answered. All right. Z-Boy says, can I make good money with a small account of $250? And what's a realistic amount per day?
Okay. So great question. Yeah, you could start with $250. You could start even with less than that. That's a realistic balance to start out with. And I'd recommend going for anywhere between a 0.5, 0.75, or even a dollar lot size. And what you're going to end up doing is try to take 1 to 2 trades within a setup. So while you got 2 positions running in a setup, you're basically doubling or maximizing the amount you're making on what would be just a single trade, right? So with you having a decent lot size on and finding maybe 3 or 4 or 5 or even more divergence plays per day, you're going to be averaging anywhere between, $7 to $15 per setup, more or less, depends on if you're catching spikes. And that will realistically roughly get you about 50 to 75 bucks a day. Now, if you can learn how to do that consistently and you do that every day throughout the week without losses, then sure, you're going to end up with a nice, $200, $500 week. And that ends up being, $1,000 months. So the best goal here is to not think about the money of the get rich quick, right? We want to focus on how many trades we can take accurately and then add those up, record them in a journal, average them out, figure out what works, and then start looking for that one particular setup that keeps working over and over and over. What I also want to incorporate is, because you have a large account, 250 is a nice size account, you can do swing trading as well. So I want you to understand this. If you were looking at the 1 hour chart over here, imagine catching a short from the top over here, right? And then you're catching a drop for over what, 8 hours? So check this out. You get your date range tool, drag this out to current price, 8 hours, right? Now, let's get our price range tool and we'll go vertical. Okay. This right here was a $183 drop.
Wow.
Okay. Just imagine having held that trade for 8 hours, right? That's the power of what swing trading can do. And on top of your scalping, where you're taking these little buy trades in and out, grab your dollar here or there. So what I'm recommending to you is, if you have a bigger account, you can do swing trading and you can take the advantage of catching spikes in a downtrend on crash. So you open that trade, let it ride out. As long as the Heikin-Ashi candles are your trade, are your color, you stay in that trade. So you'd still even be in this trade right now had you taken a short. So I just want to show you guys there's scalping and swing trading.
So that's great. Any more questions? Let me check. All right. Adnan says, you talked about MACD divergence. It's on all time frames. You'll take note of that or only the lower time frames. Do you take notice of only the lower time frames or the longer time frames?
Very good question. Very good question. So what you want to keep in mind is what kind of trader you are. So I do use MACD on both time frames, and we're going to go ahead and add that on now. Now, the thing about it is I don't have to have the same settings particularly, because I can use the MACD the way it was designed on a higher time frame. Now, what I'm going to do this here for you guys same time. Let's go on and add the columns. The most I'm really looking for on the higher time frame are just the wave cycles to end. Okay. That's all I'm really looking for, because you're not going to get that many bars printed on the higher time frames like you do on the lower time frames. So what you got to understand is when you're trading the MACD on the lower time frames, you are counting the amount of bars because this is the amount of minutes that you're going to be in your trade. When you're looking at the higher time frame, you're really paying attention to if the MACD is above or below the zero line. So to give you an accurate trade of how we would have taken a swing trade on the higher time frame, we would have entered right here, because the MACD crossed the zero line. That giving us a short position right here, just to be fair. That would be our current fair trade, because then you'd even see this confirmation candle there. So that's how you would use your indicators on a higher time frame as well.
Okay. Thank you very much. I think at this point, we would like to wrap up. We would like to express our heartfelt gratitude to ATM for sharing his knowledge and spending time with us to teach us something that I know most of us do not know. And trust me, he is well educated in trading. He has spent 8 years trading. He has actually schooled, or he has actually been schooled when it comes to trading. Unlike some of us that, we just read 1 or 2 books here and there, 1 or 2 blog posts and watch YouTube videos and all that. He has more experience, and he also offers consultation services. And you can check out his channel. I just placed it in a live chat box, which is Boom Crash Strategy. Very soon, I'll also be inviting people to my live stream. People like Adnan Global Forex. He is also into that. You can click on his name and check out his link. He's also part of the whole Boom and Crash community. There are people giving out value and helping to build the community. So I would like for you to appreciate them with a subscription and with likes on their videos, so we grow the community and print money. All right, so thank you very much. Thanks to everyone that joined the stream. Thanks for your time and your questions. We really appreciate them. All right.